In this tutorial, I'm going to show how to use a number of the indicators in the suite to help find the major tops or places where you should take profit to protect your gains. It turns out that finding market tops takes a number of indicators to assist you in finding the market tops versus finding the market bottom, which one indicator seems to work pretty well. So in the TradingView platform, enter the ticker simple SPY for S&P 500. Then again, useful to turn on some simple moving averages so you know the overall direction of SPY. And also useful to apply the find S&P 500 major bottoms indicator so you know where the major bottoms are. So the first indicator I would like to turn on to find the major top is called the spot put to call ratio sentiment change. So by turning this on, you get a new pane below your SPY chart, and then you can see a trend line on the new pane. That's the long-term average of the CBOE put to call ratio. So when the trend is at a relatively high value point, that means that there is an overwhelmingly large number of puts to the number of calls in the market, indicating that the market is getting quite bearish. And so when you see this green signal, that means it's detecting that there's a change in the trend of the longer term average put to call ratio. So that means the market likely is going to turn to the other direction. So right here it's overly bearish, and when the trend line change direction, that means the market is going to become less and less bearish, and eventually there's a high chance that it will become more bullish in terms of the sentiment. However, we are not going to use this indicator by itself. We are going to use it with another indicator called the RSI divergence. And so we are looking for the RSI divergence followed by sentiment change to the negative. So once you turn that on, it will detect a pattern where there's red line means there's an RSI divergence, meaning the SPY is printing a higher high while the SPY RSI is printing a lower low. We are not displaying the RSI here, but that is what that line represents, right? It's detecting that pattern. And then if that pattern is followed by a sentiment change from positive to negative, then that usually identify a significant or major top of SPY, right? Not 100%, but it does a pretty good job of finding such significant top, right? So for example, here again, it's RSI divergence and followed by a sentiment change to the negative, and then it's represented with a red letter, red rectangle with a capital D inside, right? And again, it's finding that top here with that pattern, and similar here. However, it doesn't, doesn't find the pattern here, so you still need to apply good risk management strategy to protect your profit if you want to avoid the loss, during these very sudden, bear cycle. Again, find the pattern here, right? So again, it doesn't find the top of the 2008 financial crisis. However, there is another complementary indicator which I like to apply, in combination with this RSI diversion with negative sentiment. It's the breadth strategy, which is introduced in another video. And in this situation, we are going to just turn on the counter trend entry setting. So it's trying to find the first instance when the breadth of the market starts to deteriorate to a certain low threshold, right? Because we know when the market change from a bull market to a bear market, inevitably the breadth of the market will deteriorate to our threshold, and it will go further beyond that threshold level to the downside. That's something that will inevitably happen as we transition right from this bull to the bear market. So we can see that the original pattern that I described is followed by these deterioration of the breadth condition, right? So that kind of further confirm that there's a high chance that the market is going to roll over, turning into a bear cycle, right? Again, the pattern is coincided with this deterioration of breadth condition. Similarly here. And earlier we didn't see the divergence pattern printed here, but the deterioration of the breadth condition definitely will take place and will be detected. Right. So again, this pattern followed by the breadth deterioration. And for the financial crisis, right, the 2008 financial crisis, that divergence pattern was not detected, but the breadth deterioration was detected. So you need to use the indicator we described here, along with good risk management technique to protect your profit and gains. Yeah.